All right, welcome to Sterling Stock Picker live stream. I'm your host, Jaden Sterling. Happy to have you here. Today is Monday, June 10th, 2024. Let's dive in. Let's talk a little bit about, hey there, let's talk about the markets. How about that? Sideways movement today. We're seeing the Dow not doing too much, down 30. Dow 30 is down 60. NASDAQ is down just under $1. We've got crude oil holding steady at 77.62. Silver below that $30 threshold. Might be a good time to pick up some more coins if you're stacking silver. 10-year bond at 462, down just a fraction. In terms of the yield, prices up slightly. Bitcoin up slightly, 69,965 US. And we've got gold, let's see, down slightly, $3.80. So kind of sideways, nothing exciting. It's going to be a very busy week. Lot of numbers being reported, but let's talk a little bit about what happened last week. Canadian government, Canada, the Federal Reserve in Canada cut interest rates 25 basis points. I applaud the Canadian Federal Reserve. That was awesome. And we need, I think we need to see that Europe has now cut interest rates. Canada has cut interest rates. Let's hope, fingers crossed, the U.S. starts to do something in that direction. There's talk that, I did a video on this a couple months ago. Was the Fed's talk more of a head fake? Washington, D.C. is calling me funny. That is funny in the middle of this live stream when I'm talking about the Federal Reserve. There you go. So we've got, we really have to start seeing more of an expansive fiscal policy. It's been so constrictive with the increase in rates over these years that I'm really, I don't know what it's going to take. Well, we know, right? A 2% CPI number, and that's a stretch. So I don't know. Let's keep our fingers crossed that at some point the U.S. comes down with rates, although I don't think it's going to happen anytime soon. All right, today, Monday, we've got NVIDIA trading post-split. So don't panic if you now look at NVIDIA and as you see the stock price at 122. It was at over $1,000 a share. It had a 10-for-1 split. So for every one share you had previously, you now have 10, and then the stock price gets reflective of that by a factor of that same amount gets lowered. So it's kind of a wash at the end of the day, but the great thing is you've got more shares, and the idea behind stock splits are so that more investors can participate and take advantage of buying the shares. It's not only stock investors, share investors, but it's also option investors, because now instead of a very high premium for these for this stock, the options are once they update, these are not updated. Let's see if they're updated over at Yahoo Finance. Let's check that out. Type in, I've got it right here. Type in NVIDIA, go to their options, and I believe, all right, so they're not even updated over here either. Not yet. They will. They'll refresh probably toward the end of the day, and we'll start to see these contracts updated, because these are not at all accurate. So stay away from the NVIDIA contracts right now because they're not accurate. So yeah, so we're starting to see where we've got some movement in some of these stocks, and I want to talk a little bit about the semiconductor sector because I had this question under Stock Forum. Thank you, Janice, for asking this question, which is, she's looking at the semiconductor space. I've been saying for a while, you need to have your money in semiconductor stocks, and it's just finding the right one for you. And she says, any advice as to the better stock, Micron or Taiwan Semiconductor? I'm trying to figure out the better of the two. So let's talk about how to do that. What you essentially want to do is you pull up both stocks and you have the chart side by side. So I'm going to pull up Micron here, and in this part, I'll pull up Taiwan Semiconductor. Now, when you look at this space and you compare when you compare the stocks side by side, you really want to compare apples to apples. I don't know if I can say that Micron and Taiwan Semiconductor are apples. I know they're in the semiconductor space, but one is a Taiwan-based company, the other is US-based. Taiwan Semiconductor really has a business model that is more situated, and here's where I find this information. I scroll down and I go to company description, and you get to read, what they do. They sell integrated circuits and other semiconductor devices. It provides a range of wafer fabrication processes, including process to manufacture complementary metal oxide semiconductor logic. And you just kind of read through here. So the company also offers customer and engineering support services, manufactures mass invents in technology, startup companies, research. So they're doing a lot of different things. And again, they're headquartered in Taiwan. So this company trades for $167. Here is the key. It's their price to earnings ratio. This is the determinant when you have two companies side by side that you're comparing within the same sector and industry. Both are technology, semiconductors, and I find that right here under the name. Here's Micron Technology Semiconductor. You're comparing the price to earnings ratio versus one another. The lower the PE, the better value. Always remember that. The lower the PE, the better value. For some reason, Micron doesn't have, because they're showing a negative EPS, earnings per share, and the only way to factor in the price to earnings ratio is to show a positive EPS. So we've got $5.19 earnings per share from Taiwan Semiconductor, which gives it a price to earnings ratio of 32. We can't compare that here because of the negative earnings. Very odd with Micron. But let's look at, let's compare it to NVIDIA. Just want to do this. I'm sure the numbers have been reflective here. And we have NVIDIA earnings per share of $1.70 trailing 12 month. That's what TTM stands for, trailing 12 months. Their price to earnings is $71.68. So if we were just to take that one metric and compare it, the PE ratio, compare the two, Taiwan Semiconductor would look like the better value just from that one metric. So Janice, to answer your question, there's a few things you can do to really look at, where is your money suited best. PE ratios is huge determinant factor, but also looking at, our North Star rating score, of course. And then you've got this stock where the MFI is 74 and almost at that 75 range, which becomes overbought and the next move is downward. So if we compare NVIDIA's, they're sitting at the same level, 78.44. Again, almost overbought. Next move would be to the downside. So, you have to go with what you're most comfortable with in terms of investing your money. You want to go with proven companies, great track records. NVIDIA has proven to us time and time again, they're continuously executing. This Taiwan semiconductor company, again, it's offshore. And I think with this market, we really want to stay onshore, investing in our own backyard, so to speak, with these companies. You just simply don't know, like with NVIDIA, we know what they do. We know the products that they offer. With these other companies, you may not have the full picture. So I wanted to share that with you. Great question. Thank you, Janice, for answering that. I hope this was helpful. So as you're looking at this space, really look at companies that I would domiciled in North America. Look at their earnings and their revenue. How well are they performing? All of these metrics should come into when you do your due diligence, should come into your thinking, in terms of making that long-term commitment. Revenue growth for NVIDIA is absolutely huge. Just 2 weeks ago, it showed up in the stock rockets twice on that list. That's always a good thing, in my opinion. Just a phenomenal company, very solid. They did have a stock split, 2021, I believe. Let's take a look on their 5-year chart. They had a split. So, as I mentioned, this is trading post-split, right? 10 for 1 was the adjusted today's trading for the split. And let's take a look at, my internet is so slow today. Let's take a look at this 5-year chart. And just to get a feel for, what has this stock done previously when it's split beforehand. And right here, July 19th of 2021, so almost 3 years ago, it split. Price was for the adjusted. So now we're adjusting for 2 splits, right? We're adjusting for that split, which was, I believe, 4 for 1. You got to hover over the S in just the right spot to bring up the stock split. And let's see what we get here. Let me go back. Split. I missed it 3 times. Easier to move the cursor off and then just go back. 4 for 1. So after that, the stock kind of moved sideways and then dipped down a little bit, but not for long. That split. So right here, it adjusted back. So for about a month, it kind of waffled a little bit, and then it took off, and then it had its normal dip down here. But so we might see that again. That's what I'm trying to say. We might see a little bit of a pullback. It's had a huge meteoric rise over these last 5 years. Just unbelievable rate of return. And, so there you go. I hope this was helpful. Do your due diligence when you look at these things, but always look at apples to apples. I wouldn't necessarily compare an Asian semiconductor company with the US. I'm not saying good or bad either way. I'm being very neutral about that, but really recognizing that in today's equity markets, may be better to stay closer to home. All right, y'all. Hope you have a great week. Thanks so much for tuning in. Continue to leave your questions in the chat. I'll answer them for you on these live streams.